the crypto market is once again facing a serious and unsettling scenario. A recent report suggests that the global crypto market, once valued at nearly $3 trillion, could face a major collapse by the year 2026. Even more concerning, Bitcoin is said to have the potential to fall as low as $10,000. According to a report published by Investor. This warning comes from Mike McGlone, a senior analyst at Bloomberg Intelligence. He believes that the strong rally Bitcoin experienced in recent years could reverse if global economic pressure continues to build. McGlone points to tight monetary policy and the risk of post-inflation deflation as key factors that could weigh heavily on risk assets, including crypto. In an extreme scenario, Bitcoin could lose a significant portion of its value from previous highs, dragging down the total crypto market capitalization. Along with it, he also highlights the role of the Federal Reserve. While the Fed does not directly control the price of cryptocurrencies, its decisions on interest rates and dollar liquidity have a major influence on market movements. When liquidity tightens, speculative assets are often the first to come under pressure, and Bitcoin, despite its growing adoption, is not immune. It is important to note, however, that this is not a guaranteed prediction, but rather a risk scenario designed to outline the worst-case possibilities for global financial markets. And this is where the bigger question begins to emerge. Next, we discussed a bearish scenario predicting Bitcoin could plunge dramatically in the coming years. Now, a fresh report from ccn.com highlights this very possibility straight from a Bloomberg analyst warning. Let's break down what that means in just 2 minutes. According to the article, a senior analyst from Bloomberg Intelligence, Mike McGlone, has warned that Bitcoin's price could drop toward $10,000. This projection is based on growing signs that the market may be entering a deeper downturn beyond a simple correction. The analyst notes that the world's largest cryptocurrency is showing increasing bearish exhaustion, suggesting a possible push into much lower price levels. Some investors still view recent declines as temporary, believing Bitcoin is simply retracing before resuming its long-term upward trend. But McGlone's warning has reignited debate on whether Bitcoin's peak for this cycle is already behind us, and if the next move could be significantly downward. Technical indicators referenced in the report also point toward the possibility of another leg lower before stabilization occurs, meaning the market might not yet have found a bottom. In essence, the article presents a risk scenario where a substantial decline to $10,000 is not dismissed outright, especially if broader market weakness persists. This doesn't mean it will happen, but it does emphasize that significant volatility remains and bearish pressures could intensify before clarity returns to the market. In the previous videos, we discussed extreme bearish scenarios, including warnings that Bitcoin could fall sharply. Now, a new analysis from FXStreet suggests that the recent crypto rebound may already be losing strength, raising concerns about another potential leg down. According to FXStreet, the latest recovery attempt in the crypto market appears to be fading. Bitcoin managed to move higher briefly, but selling pressure quickly returned, pushing prices back below key technical levels. The report highlights weakness among short-term holders, while data also shows that even some long-term holders have been reducing exposure in recent months. This behavior suggests that confidence remains fragile, and the market may not yet be ready for a sustained upward trend. FXStreet warns that if total crypto market capitalization breaks below critical support levels, a deeper correction, potentially up to 40%, could still be on the table. This aligns with earlier warnings from Bloomberg analysts, who outlined worst-case scenarios where Bitcoin could experience much steeper declines if macroeconomic pressure persists. Together, these signals paint a picture of a market still searching for stability rather than confirming a full recovery. So the key question remains, is this just another temporary pullback or the beginning of a deeper market reset? If you want to follow how this story develops, make sure to like the video, subscribe to the channel, and turn on notifications so you don't miss the next update. In the next part, we'll look at what could actually shift the trend and what signs investors should be watching closely.